Futures pointing south, but not by very much. Just a little red ink on the left-hand side of the table. David Nicholas with us this morning. All right, David, is it time to buy the big banks?
You know, Stuart, the market is treating both small banks and big banks exactly the same. And I think that's just wrong. I mean, the Fed released a report for the week ending March 15th. Small banks did lose $100 billion in deposits, which was quite a bit. But large banks gained $120 billion in deposits. So yes, Americans are moving their money out of banks, but a lot of that money is flowing in to the big money center banks. If you look at financials, it's the second cheapest sector in the S&P 500, trading at about 12 times forward right now. That's pretty dang cheap, Stuart, and we think that's a great area to start to pick up some names. We like Morgan Stanley here, trading at 12 times earnings. JP Morgan is even cheaper at 9 times earnings.
Whoa.
Bank of America is trading down to 8 times earnings. So we think the fear is overblown. There's some good value here,
That's
Stuart,
cheap.
if you don't miss it.
8 or 9 times
very cheap.
earnings for a huge bank. That is really cheap. Even I understand.
Yeah, it is. I know. We talk about tech being so overvalued and people still want to nibble. You've got real diamonds in the rough because there is some roughness around, but this is good value. We think the contagion is overblown. Also, inflation. Here's another contrarian point, Stuart. If you think inflation is stabilizing or going lower, you want to buy the banks here. And this is a different way to look at it because the reason Americans are moving money out of banks because they want to go find higher yield. They want to buy treasuries. But if rates are stabilizing, Americans may say, you know what, I'm going to keep this low rate that I have at a bank because rates are coming down, so I want to keep my money where it's at. So that's another way to look at the bank, Stuart.
Okay, the ideal portfolio, 40% treasuries, 60% stocks. Is that about right?
Stuart, I'll tell you why. Yes, you're spot on. We're in no man's land for the market right here. We are in a bullish channel, which is good, but there's really no clear leadership. You want to get paid to wait. How do you do that? You got to own treasuries. So there's a lot of great treasury funds out there. Our treasury fund, the ticker symbol is FIAX. The yield is 4.5% to maturity. I'm fine earning 4 to 5% while I wait to see which way this market goes. But I still want to be in equities. You still want to be in this market, but you don't want to be overweight equities right now, Stuart.
But 4 or 5% return with a tax break included, I'll take it because I know I'm going to get my money. All right, thanks so much indeed. We have David. We'll see you again real soon. Right. Back